Hello, Lagos. This is Brostro Drive here on 99.3 Nigeria Info. I am Hilary Nnoruka. Brostro Drive is the business show where we just bring context to business stories making the headlines here in Nigeria. And sometimes we try to cross outside of the country, but we try to keep it here within the country. And today will not be any different. This afternoon, we're looking at Nigeria's biggest banks. Five of Nigeria's biggest banks that we call FUGAZ. I'm talking about First Bank, that's First Holdco, UBA, GTCO, Access Holdings, and of course Zenith Bank. The five of them, they've all released financial results, but I'm not sure that of First Holdco has been audited. But we're going to be looking at these results to find out what stories the numbers tell and how healthy these banks are. And joining me to discuss this is Emmanuel Ogiaga, whom I've had here on the show before. He's a financial consultant and a chartered accountant. Glad to have you here, Emmanuel.
Thank you very much. Glad to be here.
So I want to start with this. Having looked at the financial results of the banks, can you give a summary of what you can glean from them?
Okay, thank you very much. It's nice to be on this show. First off is that about four of them, classified as the FUGAZ, have truly released their financial statement, excluding that of First Holdings. They had a board meeting on April 30th, and we are hopeful to see the public information soonest. So if we look at the financial performance of the those financial institutions categorized as FUGAZ, we would see that the challenges that laid out in 2025 was evidence in the numbers. To see the impact of the volatility in the foreign exchange, so the USD, the Naira to the USD. We could see the impact of the forbearance that the CBN really granted some financial institutions that were truly exposed to some organizations operating in the oil and gas industry and sector of Nigeria. We are all aware of what transpired with one major oil service organization that took a loan from a consortium of financial institutions, and somehow they encountered some challenges on that OML, that oil mining license, and it really impacted on their ability to meet up with their obligations. One good thing that we can always speak about GT is the ability to, manage their risk. We can see their loan to deposit ratio is always well below what other of their competitors within this space operating. Let's look at the numbers. For instance, we could see gross earnings of Zenith 4.1 trillion, GT although doing a 2.1 trillion for the full year of the audited full year of 2025. At the end of the day, we can see that their profit after tax was about 865 billion, compared to Zenith, which crossed the 1 trillion Naira line. Very impressive for the first time. We could see that also the recapitalization that really closed out in 2025. A couple of them raised capital and met with the timeline quite early, but we could see that now a couple of funds are available in their hands, where everyone is just on the lookout to see how they are going to, face this dilemma of either expanding their risk asset book or going the traditional way of packing these funds with the government. And we all know that this does not really yield the necessary stimulant to the economy that is always expected. The real sector needs this loan. How are they going to balance the fact that even this real sector that needs these funds may be unable to meet obligations because of the double-digit interest rates, the cost of capital, and the ability for them to, find viable platforms for which they can invest this fund? Because already a good number of them have released their Q1 2026, and we can see that the level of cautiousness is quite high. Yes, the funds are available, they have been recapitalized, the poppers are well, they're able to weather the storm from the significant devaluation that the banks encountered in 2023 and 2024, as we know that the government came up with a windfall tax, which was quite surprising, even though it's not new in the first world, in Europe and the likes, where when there's a unusual gain like this, especially spurred by governmental policies, then the government really come forward to, to take a share, a part of that. But we could see that GTCO amongst them all, exited the forbearance window, still did well and was able to declare a very impressive dividend despite the dilution of new shareholdings. That was quite impressive. We could see that even when you look at the profits after tax, adjusting for the FX related gains, they were still around the 821.3 billion range. If you look at UBA, what really saved the day for UBA was really, their expansion in the risk, providing risk assets to their various customers as well. You could see UBA doing 3 trillion but when you look at their total operating income, we see that at 1.5 trillion. But when you look at the expenses, 1.1 trillion, they were down to a profit before tax of 423.4 billion. And let's just look at the impairment impact. You could see their net impairment at about 329.3 billion compared to that of GTCO of about 17.2 billion. So that already gives you an idea of how cautious GT was, even though they were part of the consortium, but they were really, not so exposed to this company operating in the oil and gas industry.
So what keeps GTCO so efficient? And because yes, like you said, it's so many of them were exposed to risks last year, right? And like you talked about, UBA top line heavy, but bottom line not that impressive. I know that forbearance had a part to play in it. We'll talk about that. But what do you think makes GTCO efficient?
So GTCO really has been, in the forefront of their risk framework. They are very cautious. You can ask the average industrialist, they are rarely willing to, provide funds, especially when they are not, the legal platform here in Nigeria takes a long time to, the judiciary process takes a long time to recover. That's why we can see the cases of the oil and gas industry affecting significant portion. And the risk framework of GT is very strong. It's far much beyond what the other competitors are putting together. GTCO is ready to, pack their funds with the federal government through the Central Bank of Nigeria. They are willing to, do some investment vehicle offshore to, to show up the fact that their core earnings from providing risk assets is really low, even though they get penalized each year for it, but they are willing to, weather the storm with that. That's why it has really played out well for them. Very cautious of them to, advance loans to new customers. So for me, their risk framework is very strong. I listened to the conference call the last time at the AGM where Mr. Agbaji was being asked why they keep being cautious in advancing loans, and he said, the simple question was, let's look at the numbers, the whole headwinds that is going on in the economy. Is it encouraging? Is it a potential role that they can play in terms of advancing credits? And it was just it was a definite no for him, that he's not willing. So clearly he's somebody that is very cautious, extremely cautious in advancing credits.
So when you take a look at this, now let's look at the wider economy, because you just brought that in. Do you foresee these other banks trying to be risk averse just like GTCO in the coming years, especially with next year being an election year? What do you foresee?
So thank you very much. That's a good question, because a lot of investors are quite disappointed. If we look at the notice that were filed with the NGX, where they said, the financials have been, sent forth for CBN approval, and subject to the approval, dividend will be declared. And we all know that when you look at the level of impairment across board, you see that it was difficult for them to even, make a significant proposition compared to what they did in 2023 and 2024. So for the economy, I think everybody's just going to be very, very extremely cautious, even though we know that the political terrain is usually where the foreign portfolio investors usually tend to, sit back, exit their positions, and just wait for the outcome of the elections. But one good thing we've seen on the floor of the stock exchange is the fact that domestic players have stepped up their holdings and positions. They've stepped up. You have the likes of the high net worth individuals, institutional investors, the pension funds, and the likes. They've stepped up their position, and we have a very much lower foreign portfolio investor. So their stepping back will not really impact the market. But I know that a lot of investors will be seeking to sit on positions that are, that will not be detrimental to their portfolio, especially to their long-term investors as well. So everybody would just watch out for the election that will take place in January 2027. If you look at the revised calendar, the timetable as well, you see everybody has recalibrated. And for January, I mean, some financials will yet to be released. So definitely it's going to be a bucket of risk taking for some investors. Those that want to exit their position maybe at December before the end of the year, and those who want to probably take early position before the announcement of dividend. But I think the business environment has really, really adjusted, except for some volatile data like the rising price of petrol prices, the rising price of PMS. That can really destabilize a lot of factors because you're looking at overhead, you're looking at energy costs, you're looking at a lot of factors that affect the production chain. So a lot of people will be extremely cautious. They would want to, either reduce holdings on the equity and probably take on some position in the money market space. So I think a lot of people will be more cautious. We are moving into the campaign season where a lot of hot money will be moving around, and we'll have the likes of foreign portfolio investors, watching closely the moves of the incumbents, its party, their decision, their manifesto, and every other thing. But I think so far so good. The decision that Yemi Cardoso took when he took on the role, the former Minister of Finance have done very well to ensure that we don't slide completely into a situation where we won't be able to meet our receipts, our foreign receipts as well. So I think for investors, they'll be very much more cautious.
Okay, but let's look at something enormous. We see that Access Bank profit after tax, profit before tax, and profit after tax, just about half of that of Zenith. But Access Bank has assets of about 51 trillion naira, as opposed to Zenith's 31.5 trillion naira. Help my listeners understand how come you're that large and you're not making as much money as a bank that is less than smaller than you are in terms of asset space.
Yes, I think that's a concern for a lot of investors. But two factors that I'll just say are responsible for that is that Access Bank really entered some markets lately in 2025. Access Bank raised some funds in 2025. So you're seeing a balance sheet size that is quite impressive. But when you look at the yield and the impact in terms of the returns, it doesn't speak to that compared to some of their category of competitors in their space. So Access Bank is very complex now. Their structure is very complex. They have a lot of interest in African countries and offshore as well. So the impact of retranslation of currency, the impact of volatility in currency, the impact of the credit risk exposure as well as really impacted. Take for instance, look at the net impairment impact. 500 billion. That's significant. If you compare that net interest to the profit before tax of 1 trillion, that's about 50% already that has impacted this. And this goes to the ambitious approach that they follow to providing credit facility and ensuring that the real economy feel the impact of their operations. But I think as it goes from this, they will be very much cautious. They will look to recover. When you listen to the MD, Mr. Innocent, you see that his focus was on recovery really in this 2026. So the question I want to ask is, the capital you've raised, where are you going to utilize them in order to ensure that returns are adequately brought to the investors? Are we going to keep continuing the process and model of packing these funds with CBN, where you earn near nothing from these funds? This also goes to the fact that the government issues out policy to recapitalize. They mop up funds from the public, from foreign portfolio investors, and they take back this money to run the economy, to run the government. And we know that the government is still deficit funded. So that still goes to the fact that there's a need to expand the expenditure as regards public assets, public goods and services as well, so that you can stimulate the environment, stimulate the economy, and ensure that businesses feel the impact of the government as well, whether from the national level to the state level to the local government level, because you can see that already the change in the sharing ratio has impacted what gets to the local government in terms of increase in the funds. So much more questions will need to be asked at that level as well, not only at the national and the state level. So I think for assets, I think they will be looking to do much more recovery. UBA too will be looking to do more recovery as well, to ensure that they are able to, provide some level of interim dividend to encourage investors to keep their holdings as well. Because Q2 is not so far from today. This is the beginning of May, and what would happen, or what you declare in Q2 will determine how far they go now. So that is what we will all look out for.
Talking about recovery, how long do you think these banks will need to recover before they start, let's say, paying dividends for investors? So let's look at some figures. For the full year. So for the full year, GTCO, of course, paid a dividend. Astounding dividend of 12 naira 76 kobo per share.
Yes.
For Zenith Bank, it was 10 naira. That's made up of 1 naira 25 kobo interim dividend and 8 naira 75 kobo at the end of the financial year. UBA was just the interim dividend of 25 kobo and nothing else. Yeah, everyone was disappointed. We saw their share price fall by the maximum 10% as soon as markets opened on Monday after they declared they released their financial results, and fell again on Tuesday by another 10%. So what do you think? Access Bank as well, no dividend. So how long should we wait and expect them to recover to be able to pay dividend? Because for a bank like UBA, it's known as a dividend paying stock on the NGX.
Yes, so I think they're out of the woods now. If you look at the financial statement for 2025, they're really out of the woods. They've really taken that, that bullet in a huge manner and level. They are well capitalized now, especially for Access Bank. Access Bank has really built its roots so strongly around Africa. And then we are looking out to see the impact and the returns that this would, turn out in their 2026 financial statement. They have a lot of subsidiaries around Africa that would, we can see that the Naira has stabilized, and we are just hopeful that, that has also been tied to our oil receipts as well, strongly contributed by the Dangote refinery, which has continued to ensure that, we have a lot of dollar receipts. And that helps our payments of imported expenditure, importation as well. So that has been able to give us some level of stability around that space. But I believe that 1 year is quite okay for these respective banks to really pick up. They might not come back to the position where they were declaring those dividends in 2023 and 2024, especially for interim and final. But I think in 2027 they should be able to do some level of full year dividend, or if they are not able to do interim dividend this year, I think they should be able to do full, final dividend at the end of the year. Because take for instance Access Bank, there are some subsidiaries that they acquired during the year 2025, and their returns, the gains, the retained earnings, the portion of that would be consolidated in the holding company here, quoted on the floor of the stock exchange, would really, contribute to the bottom line as well. Look at UBA as well. Look at GT as well. Look at Zenith. Zenith also opened some new locations as well. So I think in 1 year we should be able to see dividend declaration. It might not be in the size of what we saw in 2023 and 2024, but I think they've taken a larger part of the bullet. And I believe that with the turn of things in the legal space and with the issue with the exposure to the oil and gas industry, I think there will be some recovery as well. And once that recovery comes in, of course, the impact will show in the statement of profit or loss.
Okay, so Lagos, we've been talking about the FUGAZ, the Nigeria's biggest banks. We've been reviewing their financial results for the 2025 financial year. That's I'm talking about First Holdco, UBA, GTCO, Access Bank, and of course Zenith Bank. We didn't touch First Holdco anyway because the results are still pending CBN approval. But what should we expect from First Holdco?
I think everybody should just expect what they've seen from UBA and Access Bank, because First Holdco is also among one of those members of the consortium that provided a significant part of the funding to the oil and gas space, and that has been the contentious matter in the legal space as well. So I think also the new chairman, Mr. Otedola, even came out to give an idea of what, how they, came out to take the whole, to absorb everything once and for all and just face the future. And I think he understands the risk inherent in doing that, because you can also, let's also look at the performance of First Bank between when this announcement came in, when he came to make this public statement, and their performance now. You see that they've done over 20% in terms of year-to-date return. So that tells you alone that some investors would exit, and I think some long-term investors will take position as well in the equity instrument.
Thanks so much. I've been speaking with Emmanuel Ogiaga. He's a chartered accountant and a financial consultant, reviewing, of course, the financial statements of Nigeria's biggest banks for 2025. It's been a pleasure doing this with you. Lagos, that's it on Broad Street Drive today. I'll be back again next week. Same time, 2:30 to 3 p.m. Same station, 99.3 Nigeria Info. And same host, Hilary Nnoruka. Up next is the news with Yvonne Ohaifu.
Nigeria Info. We are more than just radio. Subscribe to our YouTube channel at Nigeria Info FM. Check us out on Facebook at Nigeria Info 99.3. Follow us on Twitter at Nigeria Info FM and on Instagram at Nigeria Info FM Lagos for live updates as it happens. 99.3 Nigeria Info. Let's talk.